Hi everyone. Thank you for joining us today. My name is Jia Shen from Syfe Advisory team, and I will be the moderator for today's session. Joining us today is our Head of Investment Advisory, Ritesh, as well as Timothy Ho, the founder of financial blog Dollar and Cents. And together they will be sharing with us, some of the current market opportunities and the mega trends that they see. So feel free to post any questions in the Q&A box below, and we'll be taking some pauses during the presentation to address them. So without further ado, let's get this started, and over to you, Timothy.
Thanks, Joshua. Yeah, everyone, thanks for joining us today. I'm quite glad that Syfe did invite me to actually share a little bit about thematic portfolio, which I think is something which is relatively new for most of us. So see my slideshow. Okay. So before I start, I think I just want to say that, I think what Syfe have done in terms of creating this product is something which is really very, very useful. Thematic portfolio by itself it's not completely new. The team has been going on for quite some time already, a few years already at least. But I think only in the last couple of years, I started to see it as something that became more popular among many retail investors. Previously, thematic investing was something that people do know about it, but a lot of retail investors didn't really act on it or didn't have the ability to understand or to act on it, right? So I think what Syfe have created is something that's quite interesting. I think when I saw the product, I was the one who told them that, hey, I think this is great. I wouldn't mind, talking a little bit about it if you guys organize an event. So that's why they got me here. All right. I'll make a quick introduction for those of you who are not familiar with the product about what thematic investing is. So I think the first thing to note is that I think I mentioned previously, right? In the past, a lot of people, what we do when we invest is that we get exposure to what people consider a market portfolio. Right. So what this basically means is that you invest in all types of assets across all the different types of equity you can find. Right. An example that a lot of people would use would be something like the S&P 500. And what you get is essentially your expected return is the market return. Right. So you don't outperform the market, you don't underperform the market. You get what the market delivers. What thematic investing aims to do is that instead of only investing in the market portfolio, investors aim to actually invest in certain specific sectors that they think, based on macroeconomic trends, that these sectors will actually outperform the market portfolio, which is i.e. the S&P 500. And that's the whole idea of thematic investing, where we invest in certain sectors that we think will do better than the market. All right. So what does this sector consist of? There is many different variations. I'm just sharing a few examples that I can think of, right? So in recent years, I think a lot of you would have heard of the word ESG, the acronym ESG, right? And so there are portfolios that are now being built that focuses on ESG investing. So that's kind of like an example of a thematic portfolio. You have portfolios that focuses on disruptive technology, right? The whole ETFs portfolios are constructed based on that premises that these disruptive technologies will do better compared to the market portfolio, right? You can have country-specific portfolios. I think the one that's very easy to understand for us in Singapore is China, a China theme portfolio, right? Because besides the US, we see some of these mega Chinese companies like Alibaba, Tencent, the Chinese banks. These are the ones that are growing so fast over the last 5 years, and some of us may want to invest specifically into this portfolio. You can have healthcare innovation. Healthcare innovation is not very new, but I think because of the pandemic, people are starting to focus on it more. Obviously, you got the Internet of Things. You can also invest in an EV portfolio. And I think the whole idea about these portfolios that you see that I have just briefly right here is that the world is changing so fast today, right? So the whole idea is that if the world is changing so fast, and we believe that some of these sectors that you see on the board will do better than the rest of the market, then why do we not invest in these sectors, right? So that's the whole idea of thematic portfolio. Let me just give an example of electric vehicle. Not that I love electric vehicle or anything, it's just an example because someone in the Dollars and Cents team wrote an article about EVs recently, right? So imagine that you want to invest in the electric vehicle sector, right? Because you see the Singapore government saying that we must go EV. You see the rest of the world saying that we must go EV. I read a report, I think just earlier today or yesterday, that apparently Tesla Model 3, for those of you who are in the EV space, you guys will have known of Tesla. Tesla Model 3 sales in September in Germany actually outperformed Mercedes, Audi, and BMW, the flagship car. So the C class, the BM3 series, and the Audi A4. So Tesla sales in September in Germany actually outperform all the other three brands combined together, right? So if you hear some statistics like that, like, oh wow, Tesla is outselling Mercedes, BM, and Audi collectively, you start to think, hey, this is really the trend, right? It's very easy to agree that EV is the sectors, but let me just give you a quick breakdown of some of these companies you see on top, right? So Tesla, I think we all know who Tesla is, so I won't talk about it. NIO, I think a lot of you guys know about NIO. NIO has a very different approach towards electric vehicles, right? One of the key things that they offer is battery as a service, right? I hope it's not too technical for those of you who don't like cars, but basically battery as a service means that instead of going home and charge your electric vehicle into the charging port, you go to a battery replacement center and you replace the battery, right? So NIO is actually focusing on that as a potential revenue generator. And actually, it can kind of make sense because if you think about it, it's recurring revenue, right? Because you will keep needing to change your battery every few weeks when you drive the car. So that's what NIO does. Xpeng, I don't even know if I'm pronouncing it correctly. I think it's Xiaoping or something in Chinese. It's also a Chinese company like NIO. And it's focusing on electric vehicle cars, but also they're focusing on flying cars, robotics as well, right? So this is also part of their proposition as a value proposition to investors. Then you got Lucy, I hope I pronounced it correctly as well. Interestingly, for those of you who I think not many people know, this is a pre-revenue company. So what it means is that they haven't even generated revenue, but they are already on the exchange and they are worth, I think, about 36 billion USD, right? So it's amazing, right? A company that have not generated revenue already worth 36 billion. So, is it overpriced or is it just the start of something great? I don't know, right? And last but not least, you've got also old timers like Volkswagen, right? The biggest car brand in the world. They own brands like Lamborghini as well. And if you are looking to invest in EV, you would be like thinking to yourself, oh no, which companies should I invest in? Because Tim just gave me a long list of quite interesting companies, all of which have their own very unique proposition. And the truth is that it's very difficult, even if you're an EV expert, or unless you're an EV expert, it will be very difficult for you to decide why Tesla is better than NIO or Xiaoping or Volkswagen. Or Volkswagen could be an old timer that continue to remain relevant because they are pushing out a lot of EV cars right now as well to compete in the market. So I think that's the whole problem with thematic investing, where how do someone actually consider which company to invest in, even if they agree that a certain sector is going to do well, right? So we can all agree that EV sectors is going to do well, but how are we going to choose one company over the other without in-depth knowledge? And that really brings me to the problem with thematic investing or thematic portfolios, right? Number one, you really need in-depth knowledge about these sectors. I just give you an example about EVs. For those who are interested in EVs, I give you a very quick 2 minutes explanation of 5 companies that are in this space. And already you can see that there will probably be many different differing opinions about who do well, right? So you really need in-depth knowledge. Otherwise, you don't know which company to choose over the other, right? The second thing is that these are not buy and forget portfolios, right? So in the past, you buy a market portfolio or the S&P 500, you can relatively, just leave it there and leave it untouched and go about your life, and you can still make money after 5 to 10 years. So that's great, right? But a lot of these thematic portfolio, because of the fact that, all these thematic portfolio, because of the fact that they are in fast-changing industries, and a lot of time they are not established companies, some of it not pre-revenue companies. You cannot exactly just buy and then not think about it for the next 5 to 10 years, because you may very well come back and realize your money is gone, right? So that's another problem with thematic investing. You are essentially investing in companies that are not very established, right? The third point, which is linked to the second point, is that because of the volatility in a lot of these sectors, what you realize is that you actually need to rebalance your portfolio more often than not, right? I mean, you just look at Tesla. I think in 2020 they went up what, 6, 7, 8 times. I can't recall, right? And you can see how quickly these sectors can move, and that also means that you need to monitor your portfolio more often than say a traditional portfolio. And last but certainly not least, and it's quite important to note, is that with thematic investing, even if you agree that say EVs will do well, you can't really just put all your money into one or two themes that you think you know quite well, right? Because there is very little diversification, right? If the world moves away from electric suddenly and all your portfolio, 50% of a portfolio is in it, there is nothing you can do, regardless of how well you choose the companies. So the problem is that with retail investors, we are not GIC. We are not looking to put a $5 to $10 billion investment into some of these sectors. We are maybe, if you have a $10,000 portfolio, you're looking to put $1,000, $2,000 into some of these schemes. And, the amount of homework you have to do, is going to greatly outweigh the efforts or the investment amount that you're going to put in, right? So that is the problem as well with thematic portfolios, because we are not looking to invest a lot of money, and hence the amount of work we need to do, and the amount we invest is not really consistent, right? And again, and then it brings me to how robo-portfolios could potentially help retail investors, right? I think the whole idea about robo-portfolios is that you choose the theme, right? I think Ritesh will talk about it more, but you choose the theme and the portfolio manager helps you manage the portfolio. So if you think that EV does well, you can invest in EV. If you think that China is the right place to invest your money because China is going to grow, you invest in the China portfolio. If you believe that ESG is the right theme that a lot of people are going into ESG, you invest in an ESG theme portfolio, right? So that's one way to do about it. The second thing is that it's an easy way to get started. I think that's something that I want to stress, right? If you got not enough money, you got not enough knowledge, you got not enough time, then a robo portfolio makes a lot of sense to get started first, right? Third point, quite logical. When you invest in a portfolio, you are exposed to multiple companies as opposed to choosing one company over the other, right? So you gain exposure to the sector, but you don't need to pick one company over the other. And not least, I think linked to the earlier pointer of easy way to get started, I would say that as your knowledge in a certain sector build up, let's say you want to invest in EV, you start with a portfolio that is diversified across a few companies. But as your knowledge build up, you start reading more, you start to follow the news, you would have a bit more confidence, and you would make you may want to make some tactical investment into certain specific companies, right? And that's where you can do so thereafter. And maybe just to end off, before I pass the time to Ritesh, I think I went to a omakase restaurant last week with my wife, right? And I thought thematic investing is kind of like similar to eating at the chef table, right? So here's the parallels that I like to draw, right? The first thing is that similar to when you go eat at a restaurant, with thematic investing, you choose the dining theme that you want, right? So some people go into a restaurant, they want to eat a vegetarian meal. Some people want to go in and eat a seafood meal. Some people just want everything meat, right? So similarly, in a restaurant, you choose the theme you want. In investing, you also choose the theme you want, right? Then what happens after you order your meal is that the chef will curate the meal for you. So let's say today I feel like eating vegetarian, right? So the chef will curate a good vegetarian meal just for me and my partner. And, it will be based on, it will be vegetarian food, right? But it will be a good meal. And the chef curates it for me, right? For the meal, what you will eat is that you'll eat a little bit of everything, right? You are not going to have one huge portion of seafood or rice and then you can't finish the rest. You're going to sample a little bit of say 8-course or 10-course meal, right? Based on what the chef selects that he thinks is good for this meal that is delicious. It's based on what the seasonal trends are, right? The chef will select the meal. The end result is that you enjoy a great meal based on what you wanted, but you don't have to choose every single dishes yourself, right? So you choose the vegetarian meal or the seafood meal The chef curates the meal for you. You get to try everything, but you don't have to decide exactly how many oysters I want to eat or how many prawns I should buy. You don't decide on these things, right? And lastly, if you're still feeling a little bit hungry after your meal, you can choose to add on additional dishes based on what you like, right? Maybe you like the prawn a little bit more, so you order a little bit more prawn, right? So in that same way, I think you can think of thematic investing like this, right? We as the retail investors, we choose what are the themes we want to invest in. The chef, in this case, Ritesh, the chef, will curate the meal for us. We get to eat the meal, we get to try a lot of things. And at the end of the day, if you still want to eat a little bit more, you're still feeling a bit hungry, you want to invest a bit more, you can make tactical investment into specific stocks if you want, right? So I think that's just a very quick introduction. I hope it helps you guys understand thematic investing a lot more. I definitely simplified it a lot here, but hopefully it helps.
Right, thanks, Timothy. Thanks for the very nice analogy at the end. I really can feel my stomach growling also. Yeah, so I think, before we move on to the next section, there is actually, this viewer who is asking, because I think there's a lot of misconception for investors. They say oh, don't do any investments if, let's say, you are not prepared to lose all your money invested. So is it really true? And does that, apply regardless of whether or not it's robo investing or not?
Good question, man. I this was something that I also asked some of my colleagues about this thing. So the problem with something like, say, EV is that it's very difficult to understand everything about the sector, right? And I think the person who asked the question, I think it's a good question. You shouldn't invest if you don't understand. Perhaps another way of thinking about it is that the amount you invest should be in accordance to your level of confidence and knowledge, right? So if you don't know something very well, but you want to try to get started, let's say you just learn how to swim, right? Surely you won't dive into the ocean, right? You will go to the 1 meter pool, the 1.2 meter pool, and you try to swim around first, right? Only when you feel confident, when you are knowledgeable, then you will go into a slightly deeper pool when you can't touch the ground and you have to swim, right? So I think in the same extension, when it comes to investing, we can't invest beyond what we are confident about, right? You don't go into a swimming pool when you're not confident that you can swim, right? But at the same time, there comes a point where if you know enough and you want to get your feet wet, you have to also start investing from somewhere. And I think a robo portfolio, in smaller amounts, I think even within robo portfolios, I don't think anyone is going to suggest that you put all your money. I hope nobody suggests that you put all your money into a certain team, right? I don't think anyone wants that to happen as well, right? So even within investing, and when you make some of these investment into robo portfolios, the amount should not be excessive, right? It should only represent a portion of your portfolio, in my opinion, at least.
Anything to add from you, Ritesh?
Yeah, no, I think that's great points made by you, Timothy. And first of all, thank you so much for calling me the chef. I mean, if I could do that at home and cook something real, my wife would be really happy. But at least I can cook something on the thematic portfolio side. But thank you for the compliment. On this topic, essentially, I think what has happened is the market of thematic investing has evolved quite a bit. I mean, previously, as you had mentioned as well, these were kind of stuff that institutional clients only had access to. And retail clients sort of struggled in terms of getting access to these kind of investment opportunities in the first place. What has happened over time is with the advent of passively managed investment solutions and building blocks such as ETFs, it has become possible for people to even understand at a high level what these themes exactly mean, right? And at a broad level, get that exposure to that theme, because previously, people go single stock basis, right? People are excited about Tesla, a NEO, and Xpeng and other things as well. So the risk to investing was even much, much higher in that case, right? Where you have no clue and you invest and you don't know where things will go. So I think at least with the advent of ETFs, things have become easier for you to take a broad-based access. Even within that, essentially, it's still very, very high risk. And then that's the reason I totally agree with you that if you're thinking about investing and long-term basis, bulk of your investment should be in a foundational portfolio that is safe, diversified across asset classes, across geographies, across sectors. And then you sprinkle things on the top, as you said, during your analogy as well. You sprinkle things that you really desire, right? Like you really crave for. So if you like a dessert on top of a basic meal, that's where a thematic portfolio comes into play. So I totally agree with you that it should not be all your portfolio and even like a majority portion of your portfolio. These should really be layers that you put on top of your basic investment plans. And either it could be like a view that you want to take, you want to align with certain values of your investments, or you want to just express yourself, right? So whether it is for alpha chasing, or if you just like certain sectors or themes or countries, all of those are choice that you have now available.
Right. Thanks for that. So maybe we can take in one more question before we move on to like the next segment. Right. So I like, how both of you all talked about, using like a core portfolio as more like a foundation, and then like the more thematic portfolios, be it like your ESG or healthcare, as something that you add as like a dessert per se. But if let's say these thematic portfolios are not doing well, what are some of like, the advice that you could give to our clients? Like, should they be switching out their thematic portfolios, or, what should they be doing? Timothy, you want to go with? Yeah. You want to go for that first? I think you're on mute.
No, I think Ritesh should go.
All right. So, see, I think number one, it is important to understand at a high level what those themes are. And if fundamentally you believe that these themes are things that are either going to change the future for you or for the broader world, or these are just generally things that you highly align yourself with, or you just want to invest into only those companies that do good for the world, right? So ESG investing is, started like a fad or whatever you might want to call it, but now it's become so much prevalent, right? Whether it is institutional clients or retail clients, everyone has adopted this to a certain extent or other. So I think it is really important to have that perspective in mind when you're going with these thematic investments in the first place. On top of that, I think as we mentioned, right, if you're long-term aligned to particular themes, and themes can have different cycles and all with them as well. But broadly, if you're aligned, one thing that you will have to take with these themes is volatility. It is just part and parcel of investing into a very concentrated portfolio. And what that means is, as we covered earlier, essentially invest a smaller portion, satellite portion to begin with, and dollar cost average onto these kind of investments, rather than putting in a huge lump sum and then be subjected to these, high volatility, and that can give you sleepless nights, right? So I think, again, going back to first principles, build a solid foundation, build a solid core, and then you can dabble with these themes. And if after a certain period of time, your fundamental view changes, you can sort of switch it off and move to another one without incurring or sort of derailing yourself from your long-term goals.
Yeah, sure. Okay, cool. So I think we can move on to the next segment. So I think the next part, over to you, Ritesh.
All right. Sorry, just give me a moment.
Yep.
All right. So I hope the screen is visible. Joshua, is this on us? All right, great. So Timothy, thanks for giving that great background, as well as just helping people understand the concept of thematic investing. As you had covered it very, very well, thematic investing is itself on a big rise, right? And it has basically been, moving into that direction on the back of, a lot of fundamental changes that are happening within the investment world, right? So as I covered earlier, previously, it was difficult as retail investors in the first place to get access to these kind of thematic portfolios. And even the themes that have been evolving over the last 5 years are drastically different than the kind of themes that we were exposed to 5-10 years back. Back then, themes would have probably meant take a specific country exposure or sector exposure, or particular asset class exposure. That is what thematic investments would have meant back then. Now come, this part of the century, I mean, we are in a world where things are moving at a frantically high pace, right? Timothy, you mentioned about ARK investments and their portfolios. You would observe that there are not just disruptive technology or healthcare innovation or next generation internet as themes, but there are themes which are evolving, like, as you said, electric vehicles, or more in the now, like space travel and not space travel, but space related activities. So there is a specific ETF that has come in, which is just concentrated on space investing and technology associated with that. So the world is moving at a very fast pace, and these themes are emerging at a pace that we need to take note of them, and no one wants to miss out on opportunities, right? So if you look at something like a SpaceX, the valuation jump that it has had over such a short duration of time, it's just like phenomenal to just watch that. And then you wonder, like, how can you get access to this and how can you participate as well? And that's the whole idea behind thematic investing, that you get like some exposure to these emerging themes, such that if something becomes big, you do participate and also get that exposure built into your wealth creation part as well. So taking that into account, if you look at Syfe as a platform, we have introduced Syfe Select just a month back, and we've had a phenomenal response in terms of how the Syfe Select platform has been adopted across the board. In fact, most of our existing clients either moved money from our cash portfolios to invest into this, or they put in new money to invest into some of these things to sort of add on to their core portfolios that Syfe already provides. But before I go into more details on those fronts, let me just quickly introduce Syfe, because I understand there would be a lot of people who have joined in today who might not know about us in that much detail. So Syfe, as most of you would know, we are an MAS licensed Singapore headquartered digital wealth platform. And our intent is to build the next generation of financial solutions for individuals across Asia. We are here to democratize investments for anyone and everyone. So whether you are a small-time investor, an average investor just getting started, and you have a very small amount to put in, or whether you are a very experienced investor and you really want to maximize your risk-adjusted returns and design your portfolio the way you want, there is a Syfe portfolio to cater to your need, right? So whether you're putting in a few $100,000, $1 million, it is a platform which is available for everyone, and you get the same kind of institutional quality solutions, whether you are a retail client or an accredited client. Coming to our journey so far, we've had a real great run so far. So we started off in 2019, our license came in 2019. We started our platform itself much before that in terms of just building up the infrastructure and the technology behind and putting the investment team together. But really, we went live about 2 years back. And since then, it's been a phenomenal journey. Like, we have clients ranging from 18-year-old all the way to 93-year-old. We have customers from 42 different countries. Just this year, and COVID has had some impact in terms of how adoption of digital wealth management platforms have happened over the last couple of years. Our AUM grew by 4x just in the first half of 2021. If you go and look at the App Store on your Apple App Store, you will see that we are one of the leading personal financial apps in the region. We are rated very highly on all the personal finance community websites. We won the Best Digital Advisory Solution award by DigFin recently. And we are very well backed. We have raised close to $52 million US, which basically gives you the confidence that we have strategic investors and backers, and we have the sort of capacity to keep growing and keep bringing newer and more innovative solutions for everyone. Now, quickly coming to our actual suite of portfolios, fundamentally, Syfe has built our portfolios, or we have built our portfolios with one thing in mind, that we want to cater to the long-term goals that clients have. And we want to make investing very purposeful, right? Because when it comes to investing, the biggest sort of roadblock that people hit is there is just too much out there and I don't know where to get started. So if you want something simple and something straightforward for you to get started, I think Syfe is a great place for you. And even if you are an experienced investor, with the Syfe Select platform, there is a lot of customization you can do. Essentially, we can bucket our investments into 3 segments. The first 3 segments that you see here, the Cash Plus, REIT Plus, and Core, and we'll come to Syfe Select in a bit. So Cash Plus is really sort of think of it as an alternative to your savings account, right? Most of the savings bank account these days earn close to 0% interest. And with the Cash Plus kind of a solution, you're able to earn close to 1.5% projected returns. And the good thing is there is no lockup, there is no limits, there is no tiers. And the reason you are able to earn this higher yield on your cash is mainly because we invest into money market and short duration bond funds. And because of the exposure that these sort of underlying investments provide you, you get a much better return profile on your cash than money just sitting in the bank. I have to remind you that this is not a capital protected kind of a portfolio, so you cannot compare it directly with the savings account per se, but it is a very, very low risk investment portfolio. And what that means is the chances of this thing having, great drawdowns is highly, highly limited, because essentially you are investing into government-backed securities or securities from very highly credit rated companies, and these are bonds that are maturing at very short intervals. So the chances of default is very low, and plus it is a highly diversified portfolio. So your money works harder and you get at least a 1.5% return rather than money sitting just idle. So to think about it from an objective standpoint, this is the savings part of your money. If you want to optimize your savings, you can look at this. The second bucket that typically people want to optimize for is income generation. REITs as an asset class has been very popular when it comes to generating passive income, and even from a growth perspective, because REITs are listed on the stock exchange. And if you just look at the last 5-10 years, compared to the equity markets, the Singapore equity markets, the Singapore REITs market have done really, really well when it comes to even growth and capital appreciation per se. And on top of that, the way REITs are structured, they're required to give out 90% of their income as dividends to shareholders. So you get a very high dividend yield, close to 5%. From your REIT portfolio, and especially for people who are looking at generating a higher yield on their cash, this could be a potential solution for you. The third bucket is really the foundational aspect that we were talking about in terms of having your core portfolios. These portfolios are designed for your long-term investment needs. So whether it is retirement planning, financial independence, children's education, buying a house, there could be multiple different goals that you might have. And each of those goals might have different time horizons and risk appetites attached to them as well. Ideal way to cater to those goals is to have a diversified portfolio across asset classes, across geography sectors, and that is what this core portfolio does for you. So it's a mix of equity, bond, and gold. There are various choices available within the core portfolio, so you can choose a very defensive portfolio if your time horizon is really low, such as the core defensive, which is 20% equity, the rest is bond and gold. Or you can move up the risk chain to go to balanced, which is 40% growth, which is 70% equity, and equity 100, which is a 100% equity portfolio. So in a way, you're catering to 3 of your core needs, which is your savings needs, your income needs, your growth needs, right? So foundationally, once you have catered to these sort of core needs that you have, then that is the point where you should start looking at potentially putting in those sprinklers where you take a view on the market, or you want to add thematic investments and personalize your portfolio to an extent. And that's what I think the Syfe Select platform brings onto the table. So let's actually go and dig a bit deeper into Syfe Select. So this is basically your portfolio, your way. What we sort of understood based on our interactions with our clients, and we've been in the business for 2+ years now. So we are a very feedback-oriented organization. What that means is we will constantly listen to what our clients are saying and what they want more from us. And what we realize is that while the core portfolios, the foundational portfolios are great for long-term investment planning, everyone is unique and everyone wants to express themselves. They want to invest according to their beliefs, and they want to align their investments to their values as well. Also, certain clients believe that they can actually time the market, or they can do better than an average market portfolio because they truly believe in a certain megatrend, or they truly believe in a certain sort of investment and the future sort of macro environment that will support the positive aspect of that as well. So I think to cater to this demand is where we introduce the Syfe Select platform, where essentially we give you the power to personalize your portfolio and build it the way you want, right? And I think to make it a bit more easier, what we have also done is instead of just giving you a list of ETFs and telling you, go and build it yourself, we also understand that most of the clients and most of the people actually do not know where to get started and what exactly are the underlying investments that they should choose for themselves. And that's why I think the thematic portfolios that we have as part of the Syfe Select platform, we have two parts to it, the Syfe themes and the Syfe custom. So the Syfe theme is where we have created ready-made kind of templates for you. So if you are really passionate about certain themes or mega trends, we have already pre-curated certain portfolios, taking into account these mega trends and the representation of different sort of underlying instruments that contribute to that mega trend, and trying to cover the entire value chain as well, such that you don't need to do that homework. We have done that for you, and then you just subscribe to it and you are ready to go. If you are a more adventurous investor, what we have also done is even within themes, there is an ability for you to take that as a template. And if you want to remove or add certain ETFs from this pre-curated list that we have chosen for you, you can do that as well, because we understand that you might have investments elsewhere and you might have taken some specific ETF exposures outside as well. So you can really curate it the way you want using the thematic portfolios. On top of that, a lot of clients tend to also believe that they have the ability to build a portfolio from scratch. And that's what the custom portfolio enables for you to do, where we have curated 100 plus best-in-class ETFs. And then we have made the discovery process of ETFs super, super simple so that you can just go and choose different asset classes, geography, sectors, and filter as you want to sort of discover the different kind of ETFs that you like and then construct your own portfolio. So let's dig a little bit deeper into the aspects as to how this becomes a little more powerful for you as well. And rather than browsing through hundreds of thousands of investment instruments that are available for you. So, I mean, again, the world has become much more transparent. These things are actually available at multiple places. You can go into a brokerage account and do it and all as well. But the point is, how do you sort of curate it? How do you make sure that you're investing into the best-in-class underlying instruments in the first place? And how do you make sure that someone can manage the whole thing as a portfolio for you, and you don't have to constantly, if you choose 5 ETFs, you buy individual ETFs and have to keep doing it on a regular basis. So the power that comes with the Syfe Select platform is, number one, we curate the list of ETFs for you. We screen them for low expense ratio, liquidity, tracking error. We only put those ETFs which are from world's leading asset managers. So the likes of BlackRock, Invesco, ARK, State Street, Global X, VanEck. So all of these are, ETF reputed ETF managers, and they have trillions of dollars under management with them. We screen based on asset class representation, mega trends, sectors, geography, and on a whole, we then curate to a list of 100 targeted ETFs, which then can be seen across the themes and the custom portfolios as well. In terms of the themes themselves, I think what we have tried to do is try to find out the most popular themes that are currently in investors' mind, and these tend to be these 5 that we have listed right here. So ESG and clean energy, as we covered earlier, this is becoming increasingly more and more important as people become more environmentally conscious. But at the same time, if you look at the amount of spending that is happening on clean energy, it's just enormous. If you go just by the US bills that are on the anvil of getting passed, there is potentially $3.5 trillion that will be allocated to the next sort of spending bill. And a huge portion of that is catering towards clean energy. So in terms of the potential of this, it's huge. And given that we are at a sort of a critical juncture when it comes to environmental impact that is being created, I think that there is a cusp that is happening where this will become much more mainstream, and people will also try to align their investments against companies that are actually doing good for the world. Disruptive technology, we don't need to explain too much. I think Timothy already covered some bits of it, but essentially all of us are just fascinated at the pace at which technology companies are driving change in our lives. And what that means is, whether it is cybersecurity, whether it is gaming, esports, whether it is the internet as a whole, fintech, all of these are trends that are massively impacting us. There are things like cloud computing, artificial intelligence. All of these come under the broader segment of technology and disruption. And if you want to take a broad level exposure to these, there is a ready-made portfolio available to you through our Syfe Select Themes platform. Healthcare innovation, again, with COVID, we all know how important healthcare and related innovation is for us. Companies like Moderna, BioNTech have just like come out of nowhere, and they have established themselves to be, huge companies with billions of dollars of market cap in a very, very short period of time. So genomics, healthcare equipment, the rising or the more aging population as we move forward, all of these are reasons why healthcare innovation becomes more and more important, and we should care about it. China as a growth story has always been something that has been top of mind for a lot of investors, especially I think in this part of the world. In Singapore, we always want to take some specific exposure to China and some of the technology names and the ecosystem that is being built there from a structural standpoint on a long-term basis that has very big implications. And China being the second biggest economy in the world, it does make sense to take a specific exposure to China as a theme. So this is also something that has been fairly popular amongst our investor base. And given, last but not the least, the global income theme, it is a theme that has become even more important given the fact that we are living in a very, very low interest rate environment. So having a way to generate global income in a consistent manner and diversified manner across investment grade, high yield kind of opportunities is something that investors also care about, and especially in terms of preserving their capital. This becomes a way for them to get that exposure and stabilize their portfolio and do it across the world as well. Just quickly covering the custom portfolio, as I covered earlier, if you don't want to just take these themes and you want to custom build your portfolio, or you want to take these themes and edit it, you can just go to the custom section of Syfe Portfolios as well, which is on the Syfe Select platform. And the great thing is that we make the discovery process very, very easy. So we put things or ETFs or investment underlyings that are trending at any point of time. We put certain ETFs under the recommended section, which basically means these are the more broad-based ETFs that are very, very liquid, very low cost in nature, and could be used as building blocks to your portfolios. And then obviously people do care about performers. So either you want to chase high performing underliers and you want to ride on that momentum, or you believe that there is a turn that is going to happen where the bottom performers are have had too much of a bad time, so the market cycle is going to change, so you should take that exposure as well. So there is very easy way for you to filter based on these criterions, and once you are in any of these subsections, you can then sort of filter based on asset class, risk, geography, sector, and even risk, right? So sorry, we already covered risk. So you can do a lot of these things, and the information that is available to you is also in depth, where if you click on any particular ETF, you will get a very good amount of information in a very succinct manner in terms of what are the top companies, top sectors, top countries that the ETF gives you exposure to, and what has been the historical return as well. Once you have selected your list of ETFs, you can keep choosing and adding them into your portfolio. Once you've decided the allocation, the great thing about this portfolio builder is the fact that you can actually look at the portfolio level analytics, and this is one of its kind. This has never been done in this part of the world. This is one of the key innovations or creative aspects that we have incorporated into the portfolio, where it gives you the portfolio level analytics. What kind of real exposure are you getting when you put 5 of these ETFs together? That is, I think, very, very important, because then you can make an informed choice that, okay, this makes sense. I want to get this kind of asset class exposure, these companies, these sectors. These have been the historical returns, and it even computes at the portfolio level what kind of risk are you taking, right? So while it might look a little bit tough for an average investor, but I think we've given a lot of tools to make the process really easy for even an average investor to go in and create their own portfolios. So once you have decided your portfolio, you can just get started. You can decide your amounts and you can then fund them. In terms of the features, fully customizable. So the Syfe Select platform, whether it is the thematic portfolios or the custom portfolios, It is fully customizable. You can do whatever you want. You can choose any allocation. There is no minimum investments for our portfolios, so you can start with any amount. We do the curation of the ETFs, so we have selected these ETFs based on liquidity and a lot of other criteria. The great thing about these is you don't need to think about transaction charges, right? Like dividends are automatically reinvested. If you put more money onto these portfolios as a dollar cost averaging strategy, those will be invested without any extra cost to you. There is no lockup. There is no other sort of gimmicks attached to it. So you can withdraw your funds anytime you want, and you can adjust your allocations as you want as well. So again, the idea is, more power to you as a user. And we are basically through this taking you to a state where you get to a next level of personalization, right? And the idea really is like, once you have your core and foundational portfolios built and you want to express yourself in any way possible, this gives you that platform to really express yourself and take those exposures. Let's quickly wrap it up by just covering how our fee structures are. So coming from the blue tier, black tier, gold, and private wealth. So there is no minimum to get started on our platform, but the more you invest, the fees keeps coming down. Plus, as a service, like you can get more dedicated access to our team of wealth advisors, the likes of Jashwin that we have today, if you invest more with us as well, right? But essentially, very first free, there is no hidden charges. This is like a flat management fee. Everything else is sort of taken care of for you, right? And as I covered earlier, like if you want to speak to us, because I think it can still be a little bit daunting to have so much information at one go. So if you want to just understand things a little bit better and share your situation with us and help us guide you, or help we tend to help you to guide, that is something that you can do with our team of wealth experts as well. In terms of upcoming webinar, we have one coming up on Core Satellite next week, and then we have a market outlook webinar coming up on the week next. All right, so I've spoken enough, I guess. Let's take a break now and see if there are any Q&A.
Yeah, sure. So I think it's nice that Syfe has already curated 5 thematic portfolios for clients to start off with. I think most of the time, for new to investing clients, they do not know what kind of themes, what are the trends that are evolving in the market, right? So maybe to Timothy and Ritesh, what are your favorite thematic portfolios? Do you have any?
Timothy, do you want to go first? I think electric vehicles is your favorite based on what you shared.
Yeah, I mean, definitely, and I think based on the 5 portfolios that I think you guys have, I would imagine the China growth and the ESG are the ones that are a bit, to me at least, harder to ignore. I do think that they are very attractive, disruptive technology as well, actually. I think those are the ones that are, but I think disruptive technology, I get the feeling that, people are, and especially with the art ETFs doing so well, I can see a huge market there already, buying the ETFs directly. But I think, with ESG and China growth, I do think that's the attractive ones. I do have a question for Ritesh, I also want to ask, which is given that this seems to be more of tactical investments to some extent, right? Do you think that the time horizon for investors can be a little bit shorter? And is there a possibility that people would kind of just rotate their money around the various sector, right? So potentially, if technology runs up too quickly, that people will actually withdraw some money and actually allocate it to somewhere else that they think have not climbed yet.
Right. So see, I think what is important to note is these are, when you're talking about some of these themes, these are not cyclical aspects that we are targeting. These are fundamentally changing the way things will be in the future, right? So that's the premise of these thematic portfolios. So from that perspective, I think they have a long runway. They might have cycles and all, that is definitely there. But from a long-term perspective, if you think about it, they are the mega trends, right? So if these are the trends that will actually result into something that is going to alter our lives in the future, I don't think it necessarily means that you should keep changing per se. On the other hand, there could be certain aspects that might have those run-ups and all in general, right? Like I agree with you that technology and growth related sectors have had quite a run-up over the last 1 year, and people are sort of rotating their investments into more value-oriented strategies and stuff like that. But that is, I think, something that we incorporate within the core portfolios as a whole, right? So that is sort of incorporated as part of your core allocation in general. I mean, if you're looking at Syfe as a platform that is already incorporated, the disruptive technology part of it, again, will be very volatile, and it can even have greater sort of drawdowns compared to a broader technology sector, because, you know, within growth, disruptive technology is even more narrower. So it goes it's a subset of technology overall, right? So it can be even more volatile overall. But if you believe in the long-term potential of disruptive technology, then it doesn't matter, and you should just keep dollar cost averaging, for a fairly long period of time. If you look at China growth, maybe there is, when you're talking about, if you go back to the original ways that thematic portfolios were designed, where it was very sector focused or country focused and asset class focused, that's where I think the rotations and all were more prevalent, in my opinion, right? Versus these kind of themes, I think if you're talking about healthcare as a whole, and if you believe that this is something that will be relevant and will, again, impact our lives in a meaningful manner 5 years, 10 years down the line. So those things I think are secular trends, right? So these are not trends that will have too much cyclicality associated from a long-term perspective.
Right. I think also just to add on to this question, like leading up to this question itself, right? Well, I do agree that these thematic portfolios are more for circular trends, trends that we see still intact in the next 5 to 10 years. But there is this viewer who is actually asking whether or not should someone be investing in industries that have been written down, such as like the aviation or like the tourism, since we are seeing a push to open up these sectors again.
Yeah, I think that's a great question. And again, that's the reason while we have the secular growth or secular themes as curated portfolios and templates available for our users, at the same time, we have given you the option of the custom portfolios, where essentially if you are seeing those rotations happening in the market from the high growth segments to the value segments to the more cyclical sectors like aviation and cruise liners and other things, and hospitality, those are, again, yes, I mean, you can ride those trends, you can do it through our custom portfolios right now. But as I said, these are more of the cyclical parts of the trend following strategy, versus the themes that we have introduced are more sort of secular long-term trends.
Timothy, you wanted to ask Ritesh something earlier on, is it?
Yeah, I was just thinking out aloud, like, I mean, would it be fair to say that all the 5 themes here, they're not exactly built equal, meaning like they do have different risk level, they do have different, global income, I would imagine would be less volatile, I would assume, is that fair to say?
Yes, definitely correct. So global income is, I guess, rated at moderate or moderately high as a risk, versus all the others are actually rated very high risk. And that's mainly because if you think about risk rating of anything, right, like, when it comes to investing, the way it happens is you first think about asset classes, right? So you start off with like money market instruments, which are very, very liquid, very safe. So that's why we are using it in our cash portfolio. So if we go back to the first, like this kind of, this slide, you see the risk levels associated with different portfolios, right? And the idea is like the safer the instrument, the risk level will be lower and all, right? So I'm going, a level, I think broader, but the idea is the risk level keeps on increasing depending on asset class. So it moves from money market to bonds to REITs to equity. So the risk level increases that way. And then within equities, the risk level increases how narrow you are within a particular, asset class. So even within fixed income, if you're just high yield, then that is high risk. Similarly, in equity, if you're just in a specific sector or a specific country, that's a level higher risk than a globally diversified portfolio. So in terms of our classification, what it entails is 100% equity portfolio is considered level 4, which is high risk itself, because it's a equity only portfolio, single asset class. But then when you go into thematic portfolios, which are disruptive technology, so this is like technology and a subset of technology, which is, the highly disruptive ones, healthcare innovation. So only healthcare sector companies, China growth. So just growth oriented companies within China, and clean energy, right? Like, ESG is still broad, but clean energy, there are very, limited number of companies out there. So you are taking very concentrated bets when you are investing into them. And that's why they are classified as fairly high risk, right? Compared to like a global income. So yes, I mean, the risks will vary depending on what kind of themes you invest into. And it will also vary depending on how narrow or broad your exposure is.
Right, cool. Okay, thanks Timothy and Ritesh for the Q&A. I think we have come to the end of today's session, and I really hope that there was an insightful session for all our viewers. With that, thank you Timothy and Ritesh for the sharing, and to the rest of our viewers for joining us this evening, and have a restful evening, everyone. Thank you.
Thanks everyone. Thanks Timothy.
Bye-bye.
Bye.
See you, Ritesh.
Yeah.